Graeme, over to you, your stock pick. What green lights are you seeing there with Absa?
In Absa, I think everything that Mark said, but I mean, in answer to the question, can we see 200 Rand in this year? Of course, we're running out of 2024, but you know, when we say it's cheap, for context, at the half year they delivered, I think it was 12.25, somewhere around there. So let's say they're on track to deliver 25 bucks, which is I think what the market's calling. If you put 25 on a 10 multiple, which is not demanding, you know, you're at 250. So I don't know about 200 in this year, but I think it deserves to, when the dust settles, rates normalize, and I say normalize, come off maybe a little bit faster than they have. I think the provisions will definitely reverse, and yeah, there's been some turmoil in management, but you know, a business like that's an incredible franchise. So I think the forecast to December is for 14 Rands worth of dividends. You divide 14 by 170, it's like an 8% dividend yield. So you're being compensated very, very well. And it's just, for me, relative to the other banks, and remembering if rates go lower and the environment improves, it's going to lift all of the boats in the harbor. But the reality is, because they're at such a big discount to the market, there's a lot more, I believe, performance potential in Absa relative, particularly, say, to First Rand. So I think the credit cycle, and they even said so in the half year, the retail portfolio was looking better. So yeah, I think it's one of those where asymmetrically the risks are so much in your favor on the upside than on the downside if you took a 2 or 3 year view. To me, it's just a no-brainer.
All right. Well, Boxer is your stock pick. Mark, your reasons?
Yeah, so I think that, look, I mean, we haven't had a new IPO on the JSE for a while. I think there's a lot of excitement around the business. It is a discount retail business. They've got 489 stores. They want to double their store footprint, so they can add 60 stores a year for the next 5 years. So I think that the growth story is there. It's a good margin business as well. And the placement was heavily oversubscribed. So there was a lot of more institutional investors that put in for stock that didn't get their full allocation. So they're going to have to buy in the market. Now, the challenge is going to be, what price do you pay? Because on Thursday, when it opens, it'll probably open, you know, at 65 Rand a share, which is 20% more than where the institutional investors got their stock. But even at 65 Rand, I still think you can buy a Boxer.
Okay.
It might be a bit of a bumpy ride in over the next 6 months, but I think if you want to hold a stock for 5 years, I think that you will do well if you can get Boxer at 65 Rand or less.
All right. Well, thank you so much for your time and for your analysis today, gents. That is all for tonight's edition of Stock Watch. Thanks to our guest, Graeme Körner from Körner Perspective and Mark du Toit from Oyster Catcher Investments. Up next, The Close. Stay watching.